Welcome back to Finance News, the only place you need for all of the week's goings on in the stock market, business and investing. If you're confused as to why all of a sudden your stocks went up or everyone's talking about China, you're in the right place. Let's get straight into the headlines from around the world. Over in the US, the Federal Reserve and the money printer's best friend Jerome Powell faced the Federal Open Market Committee this week. He confirmed that the central bank would be raising interest rates by 1/4 of a percentage point, which is the first raise in rates in 3 years. This takes the base rate of interest into the 0.5% range, which will make borrowing more expensive in mortgages, car loans, and business financing. The rate also will see US debt payments by the government increase. Over the next year, the committee has suggested that there will be 6 more rises likely, each at 1/4 of a percentage point, pushing up the interest rate to almost 2% by the end of the year. In 2023, there will likely be more rate rises, but nothing forecast after that date so far. The rate rise was approved with only one dissent, St. Louis Fed President James Bullard, who wanted a 50 basis point increase. Responding to the committee, Fed Chairman Jerome Powell said the US economy was well positioned to handle the increases, dismissing fears that it might tip into recession. He said that the probability of a recession is not particularly elevated and that the economy is strong and will flourish in the face of current monetary policy. Now, I can't remember what you're meant to do when Jay Powell says everything's going to be okay. Do you do the opposite like Kramer, or is that not how all this works? In stocks this week, at least as of filming, have taken a bounce and the bulls look to be back in the play after a terrible start to the year. Consecutive green days, which I've almost forgot what that looks like, have allowed some of the widely sold off stocks to get back some ground. Meta platforms, Apple and even Tesla are all in the green so far this week, but I've now probably jinxed it and we'll see what happens once I finish editing this video on Friday evening. Is this now finally the start of another bull run, or is it more of a dead cat bounce? Who knows? Jumping quickly back to home soil, the UK is also facing similar problems with interest rate hikes and increasing pressures on the cost of living. As inflation soars ever higher, the Bank of England went ahead with their rise in interest rates this week, taking the rate of 1/4 point% higher to a whopping 0.75%, which is in line with pre-pandemic levels and the highest we've seen post the financial crisis. Borrowers, watch out. 4 of the 9 Monetary Policy Committee members wanted to raise rates by a full 0.5 percentage point, but 8 voted for 1/4 point, and 1 voted for no rate rise at all. We'll keep an eagle eye on these things for you, watch this space. Jumping back to the US, online retail giant Amazon has finally closed its merger with MGM. The home delivery and cloud services company has finally closed its merger with MGM Studios, which will bring a huge library of content to the Amazon Prime streaming service. The deal was confirmed closed on Thursday, costing the company $8.5 billion, and will bring the likes of James Bond and Rocky, as well as thousands of other films, under Amazon's umbrella. In a statement, the company confirmed that all employees will remain with the studio and there will be no layoffs. Netflix better watch their backs. Amazon's coming for you, and now they've got secret agents. Although Netflix have got Squid Game, so would James Bond be able to succeed some of those challenges? He'd get very sweaty in that suit. Let me know down in the comments who's going to win. This week saw Chinese stocks soar after they've been battered down over the past year. The moves come from big popular stocks like Alibaba, Tencent and JD.com, who soared over 30% earlier this week. The cause of the move was due to announcements from the Chinese government that they intended to support their stock listings a number of different ways, which would include speeding up the process of regulations, supporting overseas stock listings, and also resolving the risks around their property development sector. Finally, all of the bulls for Chinese stocks who said they'll eventually come back are now correct, but they still have a long way to go. Either way, Charlie Munger, who has remained bullish on Barber for a while, probably still won't care anyway because he's a badass.
That risk doesn't seem all that big to me.
In other news, Russia did actually meet its foreign debt payments that many investors were concerned it would default on. Although not 100% confirmed, it looks like bondholders have received a cash payment of over $100 million in US denominated bonds that were due, according to the Reuters news agency. Fears still remain that there is a risk of the country not paying, and credit agencies are warning that Russia will be downgraded if it fails to meet its debt expectations. The last time debt payments were defaulted on was all the way back in 1998, but since then it has remained stable. Over in Ukraine, as the country seeks to protect itself from Russian invaders, the country has been seeking ways to keep its economy going and raise money to protect itself. A month ago, the Ukrainian parliament passed a bill to legalize cryptocurrency and the regulation of digital assets like Bitcoin and Ethereum. Earlier this week, the country's president, Volodymyr Zelensky, signed into law establishing the legal framework to operate a regulated market. The new regulations will mean that banks and other firms will be allowed to open accounts with crypto exchanges as long as they register with the government. The government will also police the space too and act as a financial watchdog. The news comes after the country has received millions of dollars worth of donations made to it using cryptocurrency due to the decentralized platform from all over the world. All the way back here in the UK, Wetherspoons are reporting trading got back to normal after a challenging few years. The pub chain has said that it's seen trading returning back to normal patterns in recent weeks and that the weekly takings have come in at just under pre-pandemic levels. The group has managed to halve its losses, which stand at a pre-tax loss of £21.3 million for the 26 weeks to January the 23rd, which compared to over £46 million loss over the same period in the previous year. Now, after the headlines, it's time to look at some of the funnier parts of the market and things we can all have a poke and fun at.
Just when you think it couldn't get any worse, fails of the week.
First up, your reminder that managed funds from some of the smartest minds on Wall Street still fail to beat the market indexes in the long run, and even in the short term too. According to the latest information from S&P Global, the firm who tracks and manages performance of funds whom it provides information, showed that during the last year, 79% of active funds failed to beat the S&P 500 index. What do they do all day on Wall Street? Watch YouTube videos? How do I know? Oh, and one more thing, a massively popular stock here on YouTube reported earnings this week, and it's pretty embarrassing how anyone can see this company making money for their shareholders. Tattooed Chef, a company only followed because of popular stock market creators here on YouTube, reported some pretty dismal results. The company makes vegan frozen food and some other products it sells under its own brand or white label to major US stores and supermarkets. Its gross margin fell to just above 2% for Q4, short interest is around 30%, and the company operates in an extremely competitive marketplace with rising costs, new investors beware, highly speculative growth stocks published by YouTubers making more money from advertising on their videos than investing into companies have got you by the short and curlies. Anyway, after that health warning, now on to our favourite section where we review some of the best memes on Reddit's Wall Street Bets. Let's head over there and see what we've got in store.
Welcome to the best of the bets.
Oh, we've got some good ones this week, guys. First up, this poor guy is showing off his losses to the world. He says that his grandma left him 200k and now he's down to 9k. Looking into more depth, apparently he put most of it into this company called Vroom. It sells used cars. Oh dear. I'm sure she's looking down, at least you're still young. You can build it back up again, ready for the next generation to lose it all over again. In this next picture, we're reminded that one wave after another is coming after our stock market gains. On a positive note, if you are the Fed or you're in government, at least you always know that another excuse or another crisis is just around the corner, waiting for you to go and point the blame at. I wonder what the next wave's going to be. Okay, this one's epic. Want to see what Elon Musk versus Putin might look like if they were fighting in the Matrix? Well, it would probably look something like this. Hey, maybe in a few years' time, once we've got Neuralink working and maybe we all live in the metaverse, maybe we can all get tickets to this fight? Pay-per-view, anyone? One final one to leave you all with this week, another constant reminder that trading into and out of the stock market frequently is a surefire way to blow up your portfolio and look like an idiot. Oh, and you're probably then going up to end up doing your wife's new boyfriend's laundry for a while. On that note, thanks so much for watching. Please drop me a like if you've enjoyed the video, subscribe for more, and we'll see you in the same time next week. Until then, happy investing.